Alright, so we all know that billionaires are kind of the top of the food chain when it comes to investing. If you have $999 million to swing around, you tend to have a lot more power than the guy investing whatever he can into his 401k. But today we're going to be talking about a billionaire that ended up losing it all, managing to lose $10 billion due to a series of just really bad trades with way too much leverage. Let's talk about it. Back in March of 2021, it was a relatively normal day. Everything was going pretty normal on the stock market, except for the share price of Viacom CVS in Discovery. There had been a huge influx of investment into the entire streaming wars environment because people thought the user base was going to kind of grow forever. And after people kind of came to find out that a lot of the demand had been pulled forward, the share price of these companies started to fall. And as the share price fell, it triggered a margin call on a hedge fund or private family management with a little over $10 billion worth of positions amongst the largest banks in the world. You know, we're talking Credit Suisse, we're talking Deutsche Bank, we're talking Goldman, Morgan Stanley, basically anyone that had the ability for a hedge fund to work with it and borrow money ended up getting burned at least a little bit. And so I know you guys are thinking like, well, who was responsible for this? What was the, company, the business responsible for all this chaos? And the answer to that is a little company called Archegos Capital Management. Now, this capital management company was what's known as a family office, which basically is just a hedge fund that manages only one family's money. That's the simplest way to explain it. And it was owned by this guy who had built up this incredible reputation as an investor named Bill Hwang. And he is the absolute genius that managed to lose the entirety of his $10 billion fortune in a matter of hours. Basically, at the end of March, Bill Hwang had an issue. All these banks that I had mentioned earlier had lent him a bunch of money so that way him and his capital management firm could invest it. And the goal when you do that is to make more money off the stocks you've invested in than the interest rate of the money you borrowed. You pocket the difference, everyone wins. The problem was he had a substantial stake in Viacom CBS and Discovery, which are the two stocks that were plummeting. So the bank is looking at this from their end, and they're like, wow, we loaned this guy, a couple $100 million, $900 million, whatever it is, and he invested it in these stocks, and the stock price is down like 15%, so we're getting eaten alive. Technically, this is stuff that he borrowed from us, so we got to do something. And when that happens and you've borrowed money from a bank, it's called a margin call. Basically, they demand that you upfront the money that you borrowed. Otherwise, they sell the stocks that you have to cover their losses. And when they went to Bill Hwang and told him that he needed to front the money, he kind of was like, I don't have the money. And because of that, all these companies basically had a race to liquidate his holdings as fast as possible. And in the span of a day, $20 billion of the stocks that he had invested in had been sold in order to try to make any type of money back on the money they had loaned to Bill Hwang. And, obviously when $10 billion has a situation where they're trying to recall it, sell stuff as fast as possible, it caused a further effect on the stock prices to go down, so the losses got even bigger. And these losses were so big, we're talking these massive banks had to come out and basically admit that they had made a mistake of loaning way too much money out. On the 29th of March, Credit Suisse and Nomura, who are both investment banks, ended up coming out and saying that because of Archegos Capital and Bill Hwang, they were going to have a significant impact to their prime brokerage business. Which is nuts. We're talking about investment banks basically coming out and saying that their entire operation of, lending money to hedge funds and family offices was going to be severely impacted because of this mistake. One family office had a huge impact on two massive banks' entire ability to lend to the entire genre. So this was pretty far-reaching, and obviously, as they triggered the flash sale in the stocks that they were margin calling, some banks ended up getting out ahead of others. So you had some banks that, obviously took a loss, but it wasn't that bad. But yeah, if you were the last bank to wake up, realize what happened, and try to offload those shares, you probably did lose an additional 10-15% on top of whatever else you lost. As for, all these banks that lost a bunch of money, the one that ended up losing the most money, a couple of them lost, $1 billion here, a couple $100 million there, but the one that lost the most money was Credit Suisse. They ended up getting wrecked for a little over $5.5 billion in total losses following this entire situation with Archegos, going under, Bill Wang messing up, losing his $10 billion. And it actually was so bad for the bank that they had to raise money from investors. And that's never a good sign, when an investment bank gets wrecked so hard by a position liquidating that they need to go ask for a bunch of money. And it wasn't a small amount of money that they had to go ask people for with their tail between their legs. We're talking about $1.9 billion that they ended up having to raise. So all in all, this was a massive impact, and obviously that was just specifically the bank that had the largest effect, but most banks in one way or another had lent money to this guy in one way or another. So all in all, he did a fantastic job of spreading it out throughout the entirety of the financial system. In fact, the bank Credit Suisse, that took the biggest loss, was so embarrassed by all of this stuff that had gone down that they ended up making a bunch of changes to its leadership because they just wanted to make sure this would never happen again. They ended up getting rid of the CEO of the investment bank business, this chief risk and compliance officer as well got let go, and they took away the bonuses for the year that this all went down, right? So all in all, they were very upset about this. I mean, obviously they got to do what they got to do. If you mess up and lose $5.5 billion, you should assume that they're going to be coming for your job and your bonuses. I don't really know what else they expected to happen. And like I said, there was kind of an order in which banks got out of this messy situation. A couple people were left holding the biggest bag, but a couple banks were able to avoid a majority of this situation. For example, Goldman Sachs, which we all know is like the gold standard for Wall Street banks, ended up being able to get rid of a huge chunk of the money it had loaned to Archegos 3 days before the rest of this crap went crazy. So overall, they still were affected by this negatively, but they had managed to get out of the position 3 days before a bunch of news really broke about how bad the situation was. So it is a matter of whatever bank kind of figured out there was going to be a problem first, obviously wasn't too keen on letting everybody else know until they had offloaded the rest of their stuff. And as for any other banks that, managed to avoid insane losses, Morgan Stanley also managed to avoid a couple $1 billion in losses. Morgan Stanley, what's insane about this entire situation, only ended up losing, $911 million, which all in all, if you're on the list of people that made out the best from this entire disaster and you lost almost $1 billion, you can understand the scale of this financial mess up. And I think something that's really important to take away from this story, right, is why you should never over-leverage yourself. Trust me, I understand that it can be tempting to take out a massive loan at 2% to invest in the stock market because you're swearing that you're a guru and you can get 10% and you can pocket that 8% difference. But here's the problem, right? Let's say there's some unforeseen consequence that causes your shares to go down. Unless you have the same amount you borrowed on hand, you're playing a very risky game. If there's people out there that had $10 billion under management that weren't able to execute this correctly without having massive issues and losing their entirety of their fortune, I'm just saying the odds of you taking out a $50,000 loan and not losing it is not very large. A little bit of leverage is obviously an okay way to amplify your returns small amount. This isn't financial advice, this is more entertainment, but I'm just saying it should be obvious that borrowing massive amounts of money and putting them into incredibly volatile stocks is probably a good way to get your margins called. Overall, I think at this point, a majority of the damage that was done by Archegos Capital is either accounted for or going to be taken care of relatively shortly. This is getting near over a year old at this point, so As banks continue to have more time to adjust their balance sheet and make up for losses, I feel like this is going to become less and less of an important story to the market overall. But yeah, for a couple days, one man managed to cause enough chaos on Wall Street to have banks scrambling to raise more money from investors because they got their butts eaten so bad. So that's pretty impressive. All in all, I just felt like sharing the story with you guys. I just thought it was entertaining. If you enjoyed it, you could do me a huge favor. Press the like button. Let me know in the comments section down below what you thought. Or, of course, subscribe if you're new and turn on those notifications. If you really want to help me out, I'll put a link to the intro song down below, along with the link to my podcast, The Scuffed Cast. Or, of course, you could use code SCRUBBY at the G Fuel checkout. Great way to get a discount on G Fuel. Help me out at the same time. I would appreciate it. And yeah, beyond that, if you really want to help me out, there's also a link to my merch store in the description. Feel free to go pick up a t-shirt. I'm pretty biased, but it's the coolest merch to ever exist. And yeah, on that note, that'll actually do it. Don't get anyone pregnant. If you do, make sure they're hot, and I'll see you guys next time. I'm out. Peace.